So again, thanks to guys for sticking around for today's webinar. It's January 30th, 2017. We're just wrapping up our first month, really, in 2017. And I must say it's been maybe one of the most patient and selective months that in a long time. I mean, it's really been a great start to the year. Just following our signals and triggers. And with that all being said, I wanted to cover a little bit today about, again, the risk management side of things, bankroll management, some philosophies on that, and how I've in the past gone about kind of building and growing with a risk management strategy that really makes sense. And so a lot of you guys know that I started trading 10 years ago now. I was 21 at the time. At that time, when I was first starting to learn, I was also really into poker, and I kind of wanted to decide, what's more sustainable? Am I going to be able to make a career at trading or poker? Or how's this going to work? I loved playing poker. It was at the time it was pretty popular because the NHL had that hiatus for a year or two, and then all of a sudden Poker Stars blew up. And I didn't play online though; I played in person. But one thing I learned a lot from poker that transferred really well over to trading was bankroll and risk management. And that's one thing that a lot of people don't pay a whole lot of attention to in the beginning of trading. They just unfortunately a lot of the times people would kind of get the impression that it's an easy business, and it's just not. And I'll never tell anyone that it is. It's very challenging and takes a lot of discipline, as you can see today. To sit here all day to not chase breakouts, that's where people lose money. Is especially more amateur, newer traders. They feel like they have to trade all the time, and they get caught a lot of times not waiting for proper setups and chasing things around and just not properly managing the risk is the other biggest thing. So that's why today I wanted to really cover a little bit about the risk management thing, because I know that a lot of you guys have from all different walks of life and with all different size accounts and stuff like that. It's important to sort of touch on that a little bit. So again, this is just a guideline. I don't think there's a right or a wrong way to do anything. I'm the kind of person that's open to, if something's working for you, then don't change it. But I have some rules that, sort of a cardinal rule that I used to use with my poker bankroll, and that was that I would never allow myself to lose more than 5% of my entire bankroll in one day. And if I did lose 5% of it in one day, it was a horrible day. So 5% of my bankroll, and when I was playing poker, my bankroll, and the same thing goes for when you're trading at a trading account. If you lose 5% of your account one day, it's a horrible day. You probably risked a little too much. You probably weren't following your rules, or bad days happen. Losses do happen. It's part of the game, and one of the hardest things for a lot of people to accept is the fact that you cannot be right 100% of the time. It's just not possible. So there's only a few things you can control in trading. You can't control the outcome of the price, but you can control how much you're risking on every trade. Okay, for the most part, you can control, the risk reward per trade. You can control a lot of things, but there's some things that you cannot control, like halts, news halts. You can't control that. If you get stuck in a halt, then that's the cost of doing business. It's going to happen once or twice, probably in a span of a 10-year trading career, right? But as far as the risk management goes, I like the 5% rule as a maximum, and I mean an absolute maximum. The reason for that is because you would technically have to have 20 of your worst days in a row to basically bust out, to go broke in your account. So if you have a $5,000 account, 5% is $250. So that would be a bad day. That'd be a day where you had 3 or 4 triggers. You're playing still your 70% winning trades or whatever, or 60% winning trades, but they're just not working out. Could be just because the overall sentiment of the market. And again, I kind of factor that in. If it's a day like today where the market's weak, nothing's following through, and I'm watching stocks like ESES this morning run up and then fail, and I'm watching EYEG run up and fail. Well, if it's one of those days, obviously I'm not trying to put on a huge risk on the long side. Take that and absorb it. Adjust and adapt with the market every day. So if it's not a day where everything's flying high and running and running beautifully, obviously this is not the kind of day that you want to be putting a lot of money on the line with your long trades, okay? So with the 5% rule, that is an absolute limit. If you want a good shot at making this work, I think you should use that as an absolute complete dead limit, that if you hit the 5% mark, you had a bad day, and you're going to go shake it off, go to the gym, you're going to go spend the rest of your night doing whatever you're doing, go back to your trading journal, review the journal trades, make sure that there's nothing in there that you did wrong, you know, what, like whether maybe you didn't follow a rule, maybe instead of stopping out where your plan was, you held it a bit longer or averaged down. Make sure you document the trade, because every trade that I document, I remember it 10 times more the next time. Every winning trade that I journal, I'm more confident in the next one. Every losing trade that I take in the journal, I remember it again and again and again as a setup that I don't want to trade. So document it, review the journal. If there's nothing in the trades that you did wrong, if it was really just overall market sentiment was weak or some bad luck, which happens too. Maybe someone just wanted to sell. Maybe it was a perfect setup, but some fund just decided it was time for them to dump their shares and you got caught in it. You know, that happens. And you can't avoid that. So there's a big part of psychology involved in trading, and either some people have it and some people don't. So it's something that you can develop, though, and exercise and grow. And it's really something that you can't teach, but you have to just learn for yourself, because everybody's going to be a little bit different when it comes to how you handle risk, how you feel about drawdowns, and everything in between. Okay, so as a day trader, you're going to learn a lot about yourself. You're going to learn about what works for you, what doesn't, what you can handle in terms of drawdowns. Do you like, you know, for me, I like to be right almost immediately. So that's why I'm so careful with my entries. What you'll notice is when I get in a trade, I'm almost either right or wrong within 2 minutes, right? So my timing, it's taken me 10 years to get the timing down, but I got the timing down to the point where almost within 2 to 5 minutes, I'm either going to be in the money or stopping out for a small loss. So to me, it's really important to get the right entries, because I don't like sitting through drawdowns. I never have. And again, that's just based on my personality type. And, you know, I do know people that are successful that are okay with being in drawdowns. They look at the big picture trade, and that's fine. But for most of you guys, I don't think that's going to be a sustainable strategy. So try to focus on getting the right entries and managing the risk properly and managing your bankroll properly. So before I get any further into that, I still think, and although I never did this, because for me, when I first started trading, I was a prop trader, so I actually never had the opportunity to paper trade. I started trading right away with a live account, and or actually they put me on a simulator for like 2 days, and then they threw me in with a live account and 100 share limit. So I started trading real cash basically on day 3, 21 years old. So I didn't really have much time to trade simulator. I just learned all the strategies with 100 share lots, which is really small, but I'll still say it to this day. I really think, and I hope that you guys take this seriously. Trader Stewie in our room here, or sorry, not his name is Stewie in our group here, Stewie Stag. He's been trading paper for a month or two, and now he's moving on to a real account. I think it's super important. I really, really do. I don't think you should be trading real cash until you're used to order entry, until you have, you know, the idea of hotkeys set up, and you just sort of get the idea of how things move, how to manage risk. Try to follow some trades, on paper, so that you can show yourself that you can do it. Obviously, the whole feel of it's going to be different when you're trading real cash. There's going to be real emotions in it, but I can't even express enough how I think it's so important to spend minimum 1 month with us on paper, if not 2 months, maybe even 3. And then once you have a consistent sort of journal of trades that you've taken that show that you're winning and that you're on the winning side and that your risk management is on point and everything's working, then at that point, maybe you want to start a small account and again, start small. So we're going to start with a smaller account. And let's just say, for the sake of argument, that you had, this is where we're going to get into a little bit about risk management, bankroll management, and per trade management. I mean, let's just say that you started with 3,500. So obviously that's not a huge amount of money to start with, but if you have $3,500 and you're using a broker like trade 0, for example, you're going to get 6-to-1 margin, which means you can buy $21,000 worth of stock, which is not bad. You know, it's a $3,500 account. You are going to have the ability to leverage that 6 times, and that'll give you $21,000 buying power, which is pretty good. So you're going to have some room to make some trades now, but the main important thing is, what I would use that leverage for is not to pile it all in one trade. Just in case you have one trade, for example, that's working for you, and then you have a setup or a trigger on another trade, that leverage would come in handy to trade the second setup, so that all your money is not jammed up into one trade. Okay. So if the account was $3,500, and we said that we're going to go with the 5% rule, $175. That should be your worst day. All right. I know it doesn't sound like much, but I'm going to show you guys how you can, some ideas and how you can really grind up a small account and get it going for yourself. All right. So $175 will be your worst drawdown. Hopefully your average winning day is, $75, $100, 50. Doesn't matter as long as it's not like 3 times your big losing day. Okay, so your losing days, you want them to be small drawdowns. If you start with a $3,500 account and then you lose $700 in a day because you weren't managing your bankroll properly, then you're down to 28. You're going to probably be a little bit mentally taken back by that. It's going to affect you psychologically. It's going to affect your decision making. It's overall going to be more difficult for you to recover. Guys, I did a video called Day Trading Beat the Learning Curve, and that covers a lot about the trading psychology part of making up for losses. What I'm going to do today is I'm not going to get into that, but I'm going to get into more about how to avoid them and some ideas on what you can risk per trade. So let's say that today is a day where, again, the market's a little weak, pretty weak. Setups are not following through. The sentiment is obviously that, today is not going to be a huge day. I'm happy to grind out on a day like today to get 2 or 3 triggers and make a few $100 or whatever it is. Perfect. Nothing wrong with that. Those days are going to happen. But what I would suggest is, again, don't ever let yourself lose more than 5% in one day, and that shouldn't be one trade. That should be one day. All right. So how much should you be risking per trade? Well, again, this is just suggestions. It's entirely up to you, but I think that the thing is, if you're risking, like, let's say 2%, I'd say 2% is if you have a setup that you think is great, maybe 2%, which means $70 on a $3,500 account. And let's just say, for example, what was the setup we had today? Let's say ESES earlier today, short through 70. So, for example, this is how you might plan this trade, is if you're going to short 170. Where did we short 71? Right there. And the risk is, so in this example, you don't even got to risk 2%. Even if you took 1,000 shares, you're only risking $50. So less than 2% on that trade. The worst case scenario, you've already planned it out. That's the thing. So trade planning. You've already planned out the worst case. So this setup. This setup works 60, 70% of the time. Hell, even if this setup only works 50% of the time, you're still going to make money on it if you trade it properly and let it reach your targets. But the point is, you're only going to lose, worst case scenario, right here is $50, or maybe like worst case scenario, be a little slippage, we'll say 100, okay? But no more than 2% of your account. I think that 2% is a good amount to risk per trade. You'd have to have a lot of bad trades to bust out at that rate. 50 bad trades in a row. So, I mean, just some ideas there, guys. If you're wondering about what should I risk per trade, well, you should go even smaller than that. Like, why not just start with 1% or less? The way I look at it is, to be honest, guys, this is just some ideas for you. I don't really look at it in terms of percentage of the account of what I should risk. I just look at the setup and go, is this a setup I like? Yeah. How much do I like it? Okay. What am I willing to risk? $100, $200 to make $400, $500, $600? Yes. That's how I look at it. So I don't really think too much about the percentage of the account, but I think it's more important for the smaller accounts to think about the percentage a little bit more and think about what the worst drawdown is, what the worst case scenario is, and plan for the worst. Here's the difference between amateur traders and experienced traders. Amateur traders plan for the bet, they plan for the win. Experienced traders plan for the loss. And what I mean by that is we already know what the worst case scenario is. We're not blinded by what we could make. We're more interested in how much could we potentially lose in this trade? What are the odds of this trade working out for me? How many times has it worked in the past? What's the drawdown? What's the reward? And for me, anytime that I can find a setup that's a trigger that's going to give me 70% of the time a winner, 30% of the time a loser, and it's going to be 3-to-1 or more, meaning that if I'm risking 10, I'm making 30. If I'm risking 50, I'm making 150 or 200. I'll take that trade every single time. It's a process. You don't even think about it. It's just a process. And once you get used to running that process over and over and over again, it just starts working for you. So this is stuff that I never hear anybody talking about. Nobody wants to talk about risk management, losses, how to handle them, drawdowns. I don't hear anyone talking about this stuff. So this is good stuff. I'll put this in the members portal. I want you guys to have access to it. And of course, this is just my opinion. I'm not saying that any way of doing things is the wrong way. But if you're just starting out, why not trade paper for a month? Why not just get, what's a good platform like TD Ameritrade, Thinkorswim, paper money for 60 days. Follow the trades, learn how we manage the risk, learn how we manage the trades, treat it like a real account, okay? Just because it's paper, don't trade like 4,000 shares a trade. Just treat it like you would a real money account. You got to start small. You got to crawl before you can run. I think you'll have a way better chance at making this work if you take it seriously enough to put in the time to learn on paper. Just consider it like your education and your tuition. And then once you feel like you're ready, once you have a good amount of journal entries, 20, 30, 40 entries, you see the results, you've seen what you've done right, you've seen what you've done wrong, you're getting good at planning trades, managing risk, then move on to the small account. See what you can do, So again, if it's a $5,000 account, absolute worst drawdown in your day should be $250. And if you stick by that rule, you at the very least, you're going to survive a lot longer. Not everyone's cut out for trading, let's be honest. But if you want the best chance of making it work, I think these are some really good suggestions on how to manage your risk and manage your bankroll. So again, with poker, like if I ever lost more than 5%, and I have, I would just be so mad at myself. I would just be so upset that I let my emotions take over my better judgment. Let's watch ESES here into the close, guys. I'm actually going to leave it at that for now, I think, in case we get like a plum-style breakout. Remember PULM, late day? It's starting to look like that on ESES. So I'm going to cut this webinar short, guys. We'll touch on this again tomorrow. Let me just make sure there's no questions in chat here before I continue. Okay, Tommy. TD Ameritrade. $60-day paper trading account demo. Dash Trader has one. I think it's only a week though, right? And it may be delayed data. I know if you go with SureTrader, SureTrader will give you a week of real-time data. Thinkorswim gave me real time. I don't know if I hacked it somehow. I did something and it gave me real time for 60 days. I don't know how I did it. I signed up like I was going for a real money account, I think, and then I switched it to a demo, and I was just basically testing the charts, and I love the charts, but then I ended up getting TC2000. So yeah, I mean, start with paper. Again, TD Ameritrade's a platform you can use. If you want to use Trade Zero like I'm using, go ahead and sign up through the blog and open an account with them. And what you could do is just give them the minimum $500 and then just tell them that you aren't ready to trade real cash. And they could probably like just give you the data and let you trade a simulation maybe or something like that. I'll talk to them about that and see if they can do that. I think they could. And just take the time to learn properly. Take the time to practice your bankroll management, your risk management per trade. Another thing you'll notice again is today, just being super patient, you know, not feeling like you have to be in every trade all the time, not chasing things around. I'm starting to actually like ESCS a lot more for a trade now because we've had the time to test VWAP a few times, and now it's getting into the late day where shorts are kind of trapped. I'd keep a bit of an eye on this one. So let me just check and make sure there's no other questions here before I continue. And again, I'm sorry to cut this one short. I was hoping to make it a... Yeah, with TC2000. Sorry, the platform apparently you can. Yeah, I didn't know that because I never done it. But you can paper trade with this setup on TC2000 for $40. You can get the gold setup, which gives you the charts I have in the scanner, but the scanner won't be streaming in real time. You just got to refresh it manually. That'll give you real-time data and a paper trading platform to go off for a couple months if you want. I really love these guys for charting. I've really grown to love this as a charting platform. So you can probably expect to see this on my screen share for a long time. And yeah, I mean, some people might like grade setups. Some people might say like, this is an A+ setup, and for me, I'm okay risking 2% of my account on this trade. Some people might have different grades where they're like, well, this is a B setup that works 60% of the time. I still like the trade, but I'm only going to risk like 0.0005, like 0.5% on this trade. Again, for me personally, I don't focus as much on the percentage, but I think it's super important when you're building a small account to understand those numbers and those metrics to make sure that you are properly managing the risk in every trade and not overextending yourself. Because I mean, the biggest problem that I see is either you lose your patience one day or lose your discipline one day and have a horrible day where you're chasing things around and you lose more than 5% of your account, which happens to everyone at least once. And I almost don't really even care who you are. Everyone's done that at least once. A lot of these lessons, you know, it's stuff that we teach and that we really try to set in at an early stage in your trading, but most of this stuff is like it's like a bad girlfriend, you know, that everyone tries to warn you, but you have to learn for yourself. It's like that thing, you know, where you don't want to listen to everyone. You get it, you understand that there's a risk involved, but maybe you just need to learn for yourself. But I think these rules will really help sort of put things into perspective for you and give you a much better shot at making this work. So start with paper, give it a month or two. Show yourself that you can, you know, plan some trades, follow along some of my trades if you want to get an idea. I don't necessarily recommend mirroring my trades, but if that's what you're doing, if that's what you want to do at your own risk, that's fine too. Obviously, they're going really well lately, but losing is part of the game, so we always plan for our risk. We plan for our drawdown. So, you know, if we lose on ESCS short at 170, the worst case scenario for me is, you know, a couple $100. Best case scenario is a win, $700-800 on 200 risk. So whatever I'm doing, whatever you're doing is just a scale of what I'm doing. So I mean, you know, if you're trading a smaller account, then you should be trading smaller. And just again, ultimately, have a plan for every trade. Instead of planning for or getting excited about what you can win, always think about what's the potential drawdown. Plan for the loss, which I know sounds funny, but it's so true. It's the way to think. Is so when I'm getting in at 70 short, I know what the potential win is going to be, but I'm also very much so planning for the loss. So planning what's going to happen if I stop at 76. You know, is that going to ruin my day? Is it going to ruin my morning? Psychologically, is it going to screw up my overall, you know, mood for the day? Whatever it is. For me, it's gotten pretty robotic. Either I get a signal and I trigger a trade, or I don't. Losing's part of the game. Probably, you know, 30% of the time you're going to take a small loss, but 70% of the time you're going to make a nice gain. So those are some of my best tips for risk management, bankroll management. Just to review it, and this really goes back to my tips for account building video, which you should watch in the members portal. But having the trade plan, asking yourself these 3 questions, but ultimately knowing that 5%, if you lose 5% of your account in one day, walk away, be done with it. If you need to take a day off or 2 to refresh, just walk away. Step back, go back to the basics, go watch some video lessons, get re-inspired to do this properly. Come back, start small again. In the beginning, I don't even think you should risk 1% of your account. In the beginning, when you're first starting with real money, I think you should just be trading 200 share lots. Seriously. Come on, come in a trade like this with me with 100 shares and just show yourself that it works. And then when I get a long setup, try it with 100 shares, show yourself that it works. And then slowly, actually, I'll just go over one more thing with you guys, since it doesn't look like ESCS is going to give us a trade here. When I was prop trading, they had this great algorithm that it would allow you a certain daily stop loss depending on the amount that you made in the last 5 days. So it was kind of a mathematical algorithm that would calculate what you made in the last X amount of days. And it would kind of take an average of that and say, well, then based on that, here's what you're allowed to lose today. And if your account reached that daily loss limit, let's say it's $200, it would automatically liquidate your positions and it would lock out your account for the day. So that was how the prop firm would manage their risk. So if I'm underperforming one day, if I'm not at my absolute best, which happens to anybody, professional athletes, Tiger Woods has bad rounds, it happens. But on those days, they stop you out. And it's based on an algorithm that says, you make on average $200 a day. So the most we're going to let you lose is $400. That's twice, it'll take you 2 days to recover it. Maybe 3 days to recover it. And that's that. So you got to think about these sorts of things. What's your average winning day? If your average winning day is $50, then you shouldn't be losing $500 in a day. You should be stopping way before that gets out of hand to that level of a loss in a day. All right. So guys, does that all make a lot of sense to you? And again, I think I'll be able to do another webinar a little more clearly. I felt a little bit rushed in this one. And we'll go over that stuff again. But this is a good start. So again, I really recommend starting with paper. Follow along. Simulate for a month or 2, sometimes 3. Just depends on how long it takes you to feel comfortable. And then if and when you feel like you're ready, start with a small account. If you're outside of the US, I definitely recommend Trade Zero because of the 6-to-1 margin and the cheap rates. And just start picking away at a few trades here and there. When you're feeling perfect about the right setup and you're starting to get confident, maybe you can risk 2% of your account on a trade if you want. But some people don't even do that. Some people are totally comfortable just, even a lot of the times these days, I'm still just looking at trades where I can risk $100. And sometimes those $100 risk trades turn into $800 winners. It just depends, right? But I always kind of plan my trades in a way that in the beginning the risk is low, and then I can add to the winner and kind of turn a really low risk starting trade into a bigger win overall. So I'll leave you guys with that. I'm not going to get too much more into the risk management, but I hope you enjoyed that seminar. And again, we'll get more into that in the coming weeks. And if you haven't already, there's 4 main sort of videos that I think are super important that you should watch as well. And I'll go a little more into, in this video, I go a lot more into the risk, not the risk management, but the trade planning and execution side. That is the tips for account building video, which basically what you see here, these trading rules that I follow, you'll find a full detailed explanation and seminar on that right here, right in the members portal. Tips for account building, watch that. Risk management, trade planning, watch that. This is the new version of that, I guess, which I'm going to probably do again at some point with you guys when I have a little more time to do a full webinar. And start with those and then just start digging through the video lessons in your spare time. And of course, just follow the screen share as much as you can. Day in, day out, just sitting next to me every day, sitting next to JB every day, seeing how we plan our trades, execute them, plan our entries and exits, watching how we, how often we trade, what we look for. All these things are just going to start rubbing off on you. And just take it slow, one day at a time. It doesn't happen overnight. But these are things that I think are really important that I just don't hear enough people talking about. So I hope that you can take those and roll it into some good habits that you can use going forward, guys. So I'm going to call that the end of this webinar for now. I'm going to leave the screen share running until the end of the day. Looks like we might get a little late day squeeze on ESCS here.